For those of you who have been following along with all this GameStop news, it can be quite overwhelming at times. There's a ton of Wall Street lingo that's being thrown around, and that's why today we're going to break down exactly how Reddit used GameStop to take down Wall Street. But first, if you could do us a big favor and tap that like button, we would really appreciate your support. And with that out of the way, let's just dive right into today's story. So over the past week or so, day traders have sent the GameStop stock on such a wild ride that the trading app known as Robinhood has decided to shut down all stock buying for GameStop, AMC, and BlackBerry, just to name a few. Now, they're only allowing people to sell their stocks, which will in turn drive the price back down. All this stock trading drama started on the subreddit called wallstreetbets, after a few people did not take kindly to those shorts selling the stock. Andrew Leff from Citron Research, for example, shorted this stock, meaning that he bet that the price was going to go down. Then at the same time, he goes public with a negative assessment about the company, thus driving down the price like he intended. As long as the price goes down, the short seller makes money. However, if the price goes up, they lose money. The worst part about this form of gambling is that the short sell bet expires, which then forces action. You see, if the stock is at a lower price than you bought it for, you collect. But if it's higher, well, then you are forced to buy back at a loss, which only adds to the value of the stock. So this is exactly what these Reddit bros did. They flooded a bunch of stocks that rich hedge fund managers were actively betting against, and as a result, they caused what's called a short squeeze, which basically means a lot of rich people lost millions of dollars trying to quickly buy back before they lost everything. And like I mentioned, this drove the price to a height that I don't think this company has ever witnessed before. The whole thing is really creepy on the part of Robinhood, just in my personal opinion. In fact, I'm calling this as my favorite episode of 2021 by far. Reddit bros take down Wall Street using an app called Robinhood, but then in a dramatic and ironic turn of events, Robinhood bails out the rich people? In a statement, the company spoke about this move to block trades and said, "We continuously monitor the markets and make changes where necessary. In light of recent volatility, we are restricting transactions for certain securities to position closing only, including AMC, BlackBerry, Bed Bath & Beyond, Express, GameStop, Koss Headphones, Naked Brand, and Nokia. We also raised margin requirements for certain securities." And apparently, according to The Verge, Robinhood isn't the only day trading app to block trading on GameStop. Brokerages such as Charles Schwab and TD Ameritrade also put the same restrictions on them. All of this happened, folks, because on January 27th, GameStop became the most traded stock in the US, ahead of companies like Apple and Tesla. Even Fox News money analyst Charles Payne was quoted on the Wall Street Bets Twitter page commending them for finally taking down these short sellers. In the tweet, he's quoted as saying, "The shorts have had their way with the market for decades, and no one has ever complained about it. So I am thrilled that individual investors are playing the same game, and now you, big hedge funds, are losing. And boy, oh boy, do they know that they are losing. There is no chance that Wall Street is going to let this money slip out of their greasy little hands so easily. It's just baffling that they're doing it out here in broad daylight. Can you be more obvious with your elitism? This could totally be viewed as some sort of class warfare. The rich see the poor making money and then they block it? Yeah, I don't think people are just going to roll over on this one. The Wall Street Bets account also tweeted out more information regarding this recent Robinhood block and said, "Individual investors are being stripped of their ability to trade on the Robinhood app. Meanwhile, hedge funds and institutional investors can continue to trade as normal. What do you call a market that removes retail investors' ability to buy to save institutional investors short? I call that market manipulation. Plain and simple, folks. A bunch of short sellers were projecting to lose billions of dollars, and the hedge fund app called Citadel, which owns Robinhood, went, 'Not today.' It is straight up the same thing as when that one kid in your neighborhood is like a sore loser, and instead of finishing the game, he just takes the basketball and goes home, and then he tells you that you're only allowed to play basketball when he wants to. Now, believe it or not, but this Robinhood scandal has brought together both sides of the political aisle somehow, which is absolutely baffling considering that we literally had Trump supporters storming the Capitol not that long ago. For starters, Democratic Representative Alexandria Ocasio-Cortez tweeted out, "This is unacceptable. We now need to know more about the Robinhood app's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. As a member of the Financial Services Committee, I'd support a hearing if necessary." And then probably one of AOC's biggest critics, Republican radio host Ben Shapiro, tweeted out, "Note, Robinhood absolutely should not be stopping trading of GameStop. Market mechanisms include the reality that some people will attempt to game the market mechanisms, and some will pay the price. Restricting who can buy and sell is using a hammer on free markets." For now, I believe that this is a good video to start on as a way to kind of catch you up on what's been going on in the stock market, but This is still a developing story. I imagine some sort of massive lawsuit is going to be filed against Robinhood. So as more details come out, we will be the first to let you know. Now, before I get out of here, let's check out some of your comments from the video titled, Rita Ora offered $7K for a restaurant to break COVID rules for her birthday. Erica Stone says, you are famous, you are a celebrity, you are rich. Doesn't mean you can get away with anything, including breaking COVID-19 rules. Yeah, we need to let the specials know that they're not allowed to do that just because they have money. Antoinette Lachey says, if she thought that London was coming out of lockdown, why did you block out the windows to the restaurant and have the camera shut off? Very valid point. That seems like very suspicious behavior. Very suspicious. Not like you were playing by the rules at all. Hide the tapes. Noelle Blake says, okay, I'm not saying that she should have had the party, but was her house no big enough? Like, why do you need to go out? I don't understand. Like, these people live in mansions and they're still like, but my favorite restaurant, I just want to go. Just stay home. Noor Fatima says, 7K? She spent 7K? Sorry, just had a heart attack. Same, Noor, same. Kathy Smith says, maybe she's trying to do this to stay relevant. She needs to get a clue. This is very possible. I mean, she's getting lots of press from it, so it might be working, you know? Remember when she tweeted out, like, I'm not gonna release my new song until I get 100,000 tweets, and it got nothing, and then she said she got hacked, so it's very likely that that could have been her motif. But either way, that has been today's video, guys. Thank you so much for watching. I've been your host, Johnny Rogers, and until next time, stay classy, YouTube. Market mechanisms, why can't I say it? It's just the back-to-back with the word market for some reason. This is still a developing story. I imagine oh, I got a thing in my eye. What is happening? Oh, I felt it. Ah, as I was talking, I felt an eyelash go into my eye. Got it. All right. Sorry for whomever is editing this. I'm a mess.